It's probably in the monetization space right now. There's view out there that demand might be rolling over somewhat at the margin, but I would say that there's still plenty of room for adoption across the different sectors, and that story still is going to be a bit more slower moving than maybe a good portion of our audience is ready to admit at this point.
AI is often framed as a tech story, but its impacts really do extend far beyond the tech sector. From the companies building the infrastructure that power the AI to businesses using it to drive productivity and growth, opportunities really seem like they're everywhere. So today we're going to explore that AI value chain, where we are in the adoption cycle, and how investors can use sector-based ETF investing to gain diversified access to this theme. Before we get started, just a quick reminder that we're not providing investment advice or recommendations. As always, today is about information and education. Joining me today is Bipan Rai, Head of ETF and Alternatives Strategy here at BMO Global Asset Management. Bipan, welcome back to the channel. How's it going?
It's going well, Erin. Thank you for having me on today.
Yes, good to have you back. Let's dive into the topic of the day, AI, as I mentioned, often framed as a tech story, but how should investors really be thinking about it more broadly?
Yeah, it's a good question because, again, lost amidst the hoopla is the fact that, anywhere you hear AI, you automatically think about tech. Whereas, the reality is that it's quite a diversified story across several different sectors. And that really speaks to the degree by which, we think of AI as a value chain. Right. So, I mean, if we think about sort of the same way you think about energy production, there's upstream activities and there's downstream activities. So if we look further upstream, I mean, further downstream, it's a productivity enhancer, especially for those companies in sectors that move to adopt AI, either through cutting costs or improving productivity by enough that it generates revenue. So again, as we see absorption rates increase across the different sectors and improve business efficiencies, I mean, there's going to be a certain degree of value proposition there. I mean, if we're talking more upstream activities, I mean, these are firms that are from sectors that are deeply embedded in, say, the chip and compute infrastructure. So chip manufacturing and compute infrastructure. And of course, there's different sectors outside of tech that we could talk there, including, say, utilities, which are very much involved from a power generation, grid expansion, energy reliability point of view. We could talk industrials, which of course provide the picks and shovels for compute infrastructure, or we could talk about materials, which are important for critical physical inputs for power grids, or if we're talking about cooling systems, of course, that's been very topical over the last couple of months, and also for chip fabrication as well. So it's not just a tech story, Erin. I mean, this is something that expands into other sectors, and this is something that anybody who's looking at the space from a sectoral perspective should be aware of.
And you mentioned the value chain, but maybe you can go a little bit deeper in terms of what that means from an AI perspective, from enablers to adopters. How does that really look? And talk a bit more about how it maps across the sectors.
Yeah, it's a good question. And I think this is something that you could ask, say, 10 different strategies and it'll give you 10 different answers. But, fairly loosely speaking, I mean, this is the way we kind of think about it. So if we look at sort of the enablers, it's really two layers there that we're speaking to. The first layer is really the semiconductor, again, apologies for using this metaphor again, picks and shovels layer, right? So we're talking mostly about industries or firms that are in the technology sector. These are companies like, say, NVIDIA that design the chip itself and also the GPU, and then there's also incorporates companies like, say, outside of. If we're talking about outside of North America, we're talking about, say, companies that are involved in chip manufacturing, including Taiwan Semiconductor Manufacturing Company, or firms that are very much involved in high bandwidth memory manufacturing. Those, of course, are located in South Korea. But of course, there's an important one also involved in the United States, and that is Micron, right? So that's the first layer. The second layer is very much the compute infrastructure layer. So these are, the hyperscalers that we hear so much about. Those, of course, are firms like Google, of course, Google Cloud. We've got Amazon via Amazon Web Services, and of course, there's Meta and other potential firms that we could talk about from that point of view. But embedded within that compute infrastructure layers, of course, the other firms from other sectors that we've talked about before, including utilities from a power grid expansion point of view, industrials in terms of how these are the firms that really help build out those physical data centers, or we could be talking about again materials. I mean, these are firms that are important or needed as part of the data center functions, whether we're talking about cooling, physical inputs for grids, and the like. And then, those are the enablers, the first two layers. If we move past that, I mean, we're skipping over the third layer that we'd like to look at, which of course is the model developers. So those are your OpenAI, Anthropic, and the like. But if we move past that, we move into the fourth layer, which is really all about the platform itself. So again, this is where we start talking about firms in sectors like communication services, right? So these are the early users, the monetizers. They have been integrating AI into their existing business models to improve efficiency. Whether it's by personalization or also incorporating advertising as part of that revenue based approach. Also, there's new use cases as well that are emerging and somewhat burgeoning as well, and that of course includes firms in the consumer sectors, whether we're talking about discretionary or staples. These firms tend to use AI to improve operational efficiency. Emerging, of course, agentic commerce, and then obviously, this is something that we've been talking about for quite some time. Healthcare firms have been using it a lot more in terms of efficiency for drug discovery, workflow automation, and also robotic surgery. We can also talk about financial service firms, whether it's by cost savings for fraud detection, personalized services. There's so many different untapped potentials that we could be talking about. This is probably the more nascent area of the market at this point.
Definitely a lot broader than just the chip makers and software companies. It's really
Absolutely.
everywhere.
Yep.
Curious as to your thoughts on terms of where we might be in this cycle of AI. Are we still in sort of that infrastructure build out phase? Or are we seeing
Mhm.
broader monetization across sectors?
Well, it's $1 million question, right? I mean, we're going to have a better feel for this in a couple of weeks when we start to see the first few hyperscalers report their earnings. And really, what's important to pay attention there will be the plans for capex and what that looks like over the next couple of quarters. There's a lot hinging on that. But if you were to really put me in a corner and ask me, to pinpoint where we are in the AI cycle based on the available information that we have on hand today, I mean, we're probably somewhere in between, the sort of the infrastructure build out phase and the broader monetization across sectors phase. And look, I mean, if we look at spending plans right now, they remain strong. I mean, that's probably going to be the case for some time to come. But what we're in the midst of as well is this sort of build out and inference that's going to, instead of building giant models, firms are now starting to deploy them. And that's going to require a little bit more, let's say, a deepening when it comes to, chip, or at least a deepening in terms of complexity when it comes to chip manufacturing, and also an increased need for high bandwidth memory. We don't think that's going away anytime soon, but we're still very much in the very nascent phases when it comes to enterprise monetization. So those sectors that I mentioned earlier, whether we're talking about the consumer sectors, whether we're talking about healthcare or financials, or even industrials for that matter, I mean, that's still a fairly nascent part of the AI cycle in our minds.
What do you think investors are underestimating the most? Like, what's the most overlooked area?
Oh, I mean, that's a very good question that I don't know if I'm going to have a proper answer for that, Aaron. I would say it's probably in the monetization space right now because I think there's this view out there that demand might be rolling over somewhat at the margin with respect to for token usage. That's one way we can gauge that. We could sort of say that if we look at it, that's starting to roll over. So maybe at the margin, we're starting to see some degree of demand rolling over. But I would say that there's still plenty of room for adoption across the different sectors, and that story still is going to be a bit more slower moving than maybe a good portion of our audience is ready to admit at this point. I think a lot of people see the degree of spend when it comes to the hyperscalers, and again, a lot of that is front loaded. But I don't think there's enough appreciation for how the absorption might take a little bit longer than expected.
So we've talked about how AI is definitely concentrated in a couple names, but with sector ETFs, we're really giving investors sort of the opportunity to allocate to some of these areas more broadly speaking. So talk to us a bit more about our sector ETFs and how they can help investors sort of pinpoint these areas.
Yeah, for sure. I mean, through sector-based ETFs, you get a exposure outside of tech to the AI value chain, and I think that, again, to me, is a bit of an underappreciated theme. So, whether we're talking about other sectors that should participate in the compute infrastructure build out. And if I've mentioned a few of them before, of course, I'll mention them again. I mean, industrials, materials, and utilities. I mean, you're not just getting exposure to one particular company in those sectors, you're getting exposure to the broad ecosystem of firms that are within each one of those GICS1 sectors. And, what we've seen so far this year has played out in terms of the AI theme and what that's meant for sectors in general. I mean, industrials have done really, really well this year. And a big reason for that is the fact that, there has been an inordinate amount of spend that has gone into the compute infrastructure space. Before this year is really the hyperscalers that are taking advantage of that, or really benefiting from that, I should say. This year, it's been a story about industrials benefiting from that increased spend. So that's an example of how while we might be somewhat at a point where we could say that hyperscalers are valued, maybe even a bit overvalued relative to what we've seen in terms of ROI. You certainly couldn't say that about industrials going in. So again, this is just sort of a way for our listeners to understand how the broadening out theme is playing out even right before their eyes, even though it might not capture all the media headlines. There's still some of this theme that we don't think is fully appreciated in a few of the sectors that we've spoken to before. I mean, materials is another sector that we could look at. I mean, if I could tie that into the situation in the Middle East, I mean, what happened was with the closure of Hormuz is that we did lose a significant source or supply of helium from the market. And, that matters for companies that are in the material sector, because again, if you're a helium supplier, let's say, that's necessary in terms of cooling down data centers. So very much an integral part of the AI value chain. So, these are a few of the points that I would make to answer your question, Erin.
That helium point is very interesting. I had no idea that helium was used to cool things down. So
Yeah.
what are the other materials that are used? Like copper, nickel, like what does that really entail?
Yeah, I mean, there's a few of them. I mean, copper, nickel, aluminum. So a few of the base metals are also quite useful as part of that process, for sure.
Yeah, lots of ways to get exposure there. And BMO brought our sector spider ETFs to market just over a year ago. We've got the 11 GIC sectors of the S&P 500 in hedged, unhedged, really giving investors the flexibility to pinpoint where they see the best opportunity. So thank you, Bipan. That was very insightful. It's a fascinating theme. I think it's ever changing, and I'm looking forward to maybe having you back after we get a better idea about earnings and stuff as they come out. But thank you for joining me today.
For sure. Thank you for having me on, Aaron.
That's all we have for today. Thanks for joining us, and we'll see you next time. Bye for now.